Hey everyone, I'm Tesa from Flashbots. If you guys don't know and you're coming from the AI space, Flashbots is a blockchain infrastructure company primarily known for MEV. So I'm going to have these great set of panelists introduce themselves really quickly and introduce their project before we dive into everything.
Yeah, I'm Dewdney, CEO and co-founder of Kuvi.ai. Sorry if that's a repeat. I've been into crypto since 2011, builders in the space since 2017, and yeah, that's about it.
Hi, my name is Soufia. So I'm the head of DeFi the head of growth at Mellow. Been in the space since 2016, started as a developer in DeFi since 2020. Yeah, and super excited to talk about in this panel.
Hi, I'm Mikael. I am a founder and CTO of Gearbox Protocol, and we are building a tokenization lending stack. And since 2024, while I'm here, I am very deep in possibilities how agent could manage capital. We built a lot of things, and right now I think maybe like in a few weeks we will launch Gearbox Agentic. So I think it's a quite interesting opportunity to talk about.
Hi everyone, I'm Ben Weintraub. I'm one of the founders of Synchronicity. I'm a longtime DeFi builder. Synchronicity is the best exchange for agents to trade, and we believe that that's the case because our exchange eliminates latency arbitrage, and we believe that agents are going to be more price sensitive than human actors. So we've optimized our system to facilitate agents to deploy strategies and humans to deploy strategies with agent assistance. So hence my question from before.
All right, let's dive into it. So when we move from, say, algo trading to fully autonomous agents allocating capital and executing trades, there's a fundamental nature of risk just in general changes. Humans are generally reactive when you do risk management when you're trading, but on the agentic execution side, you know, agents are predictive. They're reading data in real time and they can kind of predict what's going to happen. So how does portfolio construction change when the core allocator becomes an AI agent and the reasoning engine isn't like a risk investment committee? Where are the hard boundaries of risk and what should be encoded or enshrined? We'll start with you, Ben, because you have the exchange.
Thank you. I think it's important to look at how agents have evolved and how humans are using agents has evolved in the context of coding, which is probably the thing that we've seen the most success and the labs really invest the most into in the short term. And what happened is ultimately Cursor really started with the IDE but putting the agent on the side. And what happened is over time, the AI ended up taking over more and more and more of the interface. And so where we see things going is that world that you paint, Tesa, is probably a little bit further out than what you might expect seeing the acceleration of AI in the coding context, particularly because humans are so risk averse. So what we see happening is more in the short term, more of that co-pilot style thing where people aren't going to be, to me the idea of go make me money is sort of a pipe dream. And instead humans, I think I'm highly aligned with Dylan's thesis about the intent, the ideas, the imagination, really the unique insight that humans bring from our unique experience and our unique perspective. What the agents are fundamentally going to be used in the short term and even the medium term is to help tease out the alpha in your ideas and in your thesis. So it's like, maybe I don't have the way to figure out how can I properly express what my idea is and to do it in the most efficient way. Maybe I don't have a deep statistical background, but the agents can apply modern portfolio theory to how I manage risk. So it's not so much, here's my money and go figure it out. I think that's a long way out. Whereas this is what I believe. This is my values. Can you help me efficiently express those views in the market and then help me create a deterministic trading strategy that gets executed perfectly without latency arbitrage? That's where I see the world going.
Mikael?
I agree with your point. So I think initially people tried to solve the problem how to optimize trading as a mass function. And they believe that we can construct a machine which could really win the majority of deals. But what we can see right now, and I think this comparison with how you build with agents, I practically write code and I open maybe 10 terminals. And I can see from my experience, at the beginning you start to solve problems, and then right now the most interesting topic for me, how to leverage myself. And it's amazing. So you can ask agent to read 1,000 pages, and if you can construct what you want to extract, if you have some kind of values you want to build, it's really so powerful, so great. The same logic, we will start with planning, building on values, on your such kind of common sense. What's the next? You believe maybe some kind of in biotech will be have a high growth later, so start to examine, and people would really do this research with agents. Maybe we would be able to really go deeply into the corporations to understand what's going on, and then of course agents could do by themselves. But the best in this world, that it's not a kind of template for everyone. I have one practice to do, and maybe Soufia have another's, and Ben the third one, how you work with agents. They will really do it affordable for everyone, and I think it's a very good thing for capital allocation.
Yeah, I mean, I would kind of echo what both of them said. I think with agents, it's really intent driven. So it's basically a prompt about your end goal. So like, let's say, for example, within the context of DeFi, you want to earn 8% yield. I think like that is like obviously like something that is like obvious, but then also like you want to look at different risk parameters, right? So if you want to look at certain metrics where you wouldn't want that 8% yield, like if you want to basically just limit it to certain protocols, certain oracles. So I think what's most interesting within that is also kind of fragmenting away what we call farming fatigue. I think it's like really relevant in DeFi right now. There's, thousands of like DeFi yield ops like on Gearbox, on different lending markets. And I think what's really great about agents is that they sort of abstract away the sea of all the different ops and kind of focus on your sort of goal-driven prompt. But I think that we should kind of still be mindful about certain risk parameters. And so this is basically called like the hybrid model. So your agent basically is looking at like the mempool, is looking at different ops, and then like your bot is what is essentially like encoding like your hard rules, right? So like this is like something that I don't want to go for. So I think it's kind of a mix of both. I think, for example, agents would be great at curation, but they still have to be sort of limited by like hard factors, like hard-coded factors.
I'm really excited to see where this kind of symbiosis of agents plus humans go. I think the humans always will have intent for some time to come, and like most emergent properties and intuition about the market and imagination and all of that stuff is going to be a human side, but Agentic AI is just a really, really interesting tool to use to gain a better understanding over things that you may not know about. And when you can, for example, interrogate your AI or your platform to help you understand what are the standard ways to make more money with a small amount of risk, and then start to further get deep into that and ask that, okay, why do you think that? Like, and go from there, and then set up different types of strategies. I come at from that perspective. I think that's just like a very, very powerful thing to consider, and I really hope that more and more people think about doing it, and I think it's going to open opportunities for that.
Yeah, maybe just to add on the topic of more people, I think this was like always the biggest topic of like, how do we onboard the next billion users, right? So I think that's basically like, this is the perfect Trojan horse, right? So it's not going to be the next billion people, it's going to be the next billion agents. So the future of agentic finance is going to be basically like one single prompt. So like actually like logging in a website and like, you know, like just kind of doing your own swaps is going to be as antiquated as like a stockbroker calling like from a rotary phone.
Which is the perfect segue into the next question about scaling agentic finance. Let's do the assumption that, okay, everybody trusts agents, because we have to get past that first. What is the infrastructure requirements for agentic finance to actually tap into the current TradFi institutional wealth and just the capital that's sitting there? We'll start with you, Mikael.
Oh, thanks. I think we have in some future a big difference between things which could be used by normies, some people who are not institutional users, because in this case the main reason of agents is to protect them, not to make things when people start to play casino. If the market would go to casino side, it would be a big fail for all agentic world. And believe me, I think when agents start to deploy capital actively, a lot of security problems comes to scene, because all these scammers and hackers, etc., they did not disappear. They will try to find a way how to fool your agent. And with people greediness and desire to earn more and more, it could be a very catastrophic way, because even right now, you know that there are so many examples when the modern anthropic models could be fooled easily, and imagine if you trust some capital. So I think the scaling model should be done in a more secure way. Otherwise, it would be short period of casino, and then people will be really not satisfied. But when we go to institutional side, what you're asking for, it's a totally different landscape, because people usually, as a qualified investors, they know what they do. They are not interested to get 1,400 person on meme coins. Here they really use them for deep research, for something else. And this autonomous system, and right now I think people who are interested in agentic things, me personally, build things which could autonomously do a lot of research, which could understand what's going on in these companies, sectors or industries better, to provide you a very brief summary needed to decision making, and these players would really leverage their possibility. But one more thing I just want to emphasize: trading by agents is not possible in short term. If you go, I have some friends who work in high frequency trading, you will never overcompete them. It's like you try to jog and they have a hypersonic flight, so it's not possible. But in terms of investing and allocating capital, it's a great way to really remove some middlemen, because right now if you go to any fund, you use some heads, maybe very smart people, 4 or 5, who try to find the best opportunities for you. And agents, if you cook them properly, could do this job much better. And it's just a way how you can remove middlemen. And I think for treasuries, for people who do this financial planning, it's such great tools that they will really absorb it soon. So it's not a billions people in my perception, but some institutionals who use it actively with large checks.
Soufia, you want to build on that?
Yeah, I think so. With TradFi, we kind of have to look at like data asymmetry. The really great reason I think why agents have picked up in DeFi is basically access to intelligence, like maybe like mempool, Oracle data. So essentially, like if you look at this from like a TradFi perspective, like if you look at a mempool, like this would be like akin to looking at like a pre-order book, right, of an exchange, which is not possible. So I think the access to data that we have on chain is basically what allows agents to make smart decisions. I think there's many limitations as well with agents operating on like TradFi. Also, like you kind of hit a very big brick wall of compliance, KYC, and also a lot of fees, right? So if you're looking at credit cards fees, like that can ramp up. If we look at, for example, a good case scenario in DeFi is like Base, which basically is the chain that has the most volume of activity for agents. I think it has over 60%. And actually 98% of the settlements with agents are in USDC, which is the prominent stablecoin on Base. So I think it's all these like macro factors that we have to look at. And then also if your agent is doing settlements, right, like on Base, it's a fraction of a cent. So all of these things factor in as to why agentic finance has really taken over in DeFi. Because if you look at it from like a TradFi perspective, you're essentially trying to put like modern rails on a system that was created in the 70s. Unless we like go about like tokenizing all the assets, where I think like this could be a great venue where we can see like a big spike in volume of agentic finance. But I think it's it's not a distant future.
Dylan?
Yeah, I think actually to dovetail with what you said about tokenization, if I don't think it's like a matter of if, it's definitely a matter of when. We have like institutionalization of the idea of tokenizing securities, like that's going to happen, and tokenization is going to happen. How quickly it happens, not sure, but once it happens, the idea of abstracting away whether or not it's crypto becomes very salient, because you can just say, and I just look at this the same way as like Polymarket. Polymarket's not like a crypto company. That's not how they're selling themselves. But they need crypto to run. Technically speaking, through tokenization, any asset, any financial market, anything that's traditional, anything that's still up for grabs in the future with our imagination, that's all up for grabs, and it can just be the crypto side can be like abstracted away. So you can just say like you can have some strategy, or you want to do something, like it doesn't it can be tokenized Apple stock, right? Like it's like you don't have to like, again, I use this example, you don't have to call some guy like and have them do that for you, or have some broker, or have people in a family office that are employed. Like, so I think there's another huge opportunity there with FOs, and even just funds, and they're running some light strategies as well with their assets and treasury management among companies that have big treasuries as well. Like that's another big, like that's just sitting there. They may be paying someone. They could probably employ all of the aspects of agentic finance that we've been discussing to do that. Phil Fogel spoke before me, but risk, obviously, another huge aspect of that. But that's, looks like that's getting solved too. So it's just a matter of time.
Ben, what are your thoughts?
No, I think there's an interesting through line here between what you said, Michael, and what you're working on, Dylan, where I agree completely that the idea that agents are going to be able to outcompete HFTs, particularly if they're trading continuously, it's blasphemous. It doesn't align with the way that the technology actually works, or the way HFT works. And as I'm sure many people here know, high-frequency trading is a disproportionate amount of the volume in the market in general. And so when we think about agents really starting to take over and dominate the scene, it's important to, I think, separate the strategy generation from the execution. And the world that I see this going to, and I'll relate it to the custody and the tokenization shortly, is ultimately the agents are going to help you become a better strategist and to express better and more refined strategy. But when it comes to execution, the agents are going to be hypersensitive to execution. If I told you, Michael, you're going to lose 0.04 of a cent on your next trade because you're trading on some brokerage or Robinhood that sells your order flow, you're like, dude, I can't be bothered to go migrate somewhere else over 0.04 of a cent. It's just not, viable. Whereas for the agents, it's very low friction, at least in theory, to do so. And so I think we're going to start to see this split between the creation of the strategies and how people are actually making financial decisions through the agents, but the output is going to be some deterministic strategy, and then the agents are going to guide people to execute better. Now, if you look at the trend of tokenization, it really feels like the wave has already started, and we don't know how long it's going to take. Everyone here on the panel is pretty young, so I think we'll see it. It's taking quite a bit of time, but it's officially started. Where I think things really get interesting, though, is the agents need a way to communicate with the platforms. So when you ask about connecting to TradFi, right, and how does this agentic finance integrate with TradFi? You know, Robinhood just came out with their own system to make it such that you can now plug in your own agent. But Fidelity, for example, doesn't even have an API. So given that, it's really impossible to even connect your current brokerage to your agents. And so what I think we're going to start to see is more and more firms are going to either adjust or fall behind pretty quickly. And this is where now you start to get in the question around how strong are the recommendations going to be from the agents, right? How soon is the agent going to tell you, hey man, you know, your Fidelity account isn't working for you. You need to go migrate either on-chain or to somewhere else. So this is, I think, the interesting dynamics that we're starting to see play out around how strong of an advice is the agent really going to give you. And this is where I think, you know, Dylan, I'm curious about how you think about guiding the users to actually like make better decisions, right? Because there's a big difference between, hey, this is what I think, and then getting pushback of like, well, what about this, you know? And so this is where I think the agents, and you know, you can talk about it in the context of TradFi versus self-custody, but I think this is really the dynamic that people are going to be wrestling with, and the lawyers are going to have a field day with, financial advice, so on and so forth. So a couple different disparate thoughts there.
Okay, so just to let you guys know, DTCC is probably going to start tokenizing securities by the Q4 of this year, so it's already en route. And going with that, this is the next question. We already have, okay, oracles, we've got self-custody key management, wallets, automated compliance gates, you know, already on board. Is there any missing piece on the blockchain side for agentic, you know, for agents to start trading these tokenized securities, in your opinions? Who's the next person?
I don't personally see too many blockers. I mean, especially with the ascendance of Hyperliquid, I'm curious to see how that all plays out. They're getting a little bit of regulatory scrutiny, or at least murmurs as we're going forward. But I don't see there doesn't seem to be too much like first principles blockers against agentic finance or agentic AI starting to work.
Maybe not on the technology side, but on regulatory side or legal side?
Yeah, and that dovetailing with your question is like, to me, about the like how much advice, how strong is the directive to the user about like, hey, you should do this, like you should think about this, or why did you not do that? You know,
How long is your disclaimer?
Yeah, right. And like this is quickly approaching something that looks like financial advice, looks like wealth management. When we began our journey about 14 months ago, like our first, like, for a lot of the money we spent in the beginning was with lawyer meetings and thinking through the regulatory hurdles that may happen when we're, you know, having this platform that is sort of tantamount to financial advice and kind of like wealth management. The way that we and by the way, like wealth management is like, whether you're in like the worst banana republic in South America or whether you're in Norway, it's like the most heavily regulated thing like in the world. It doesn't, like, they definitely want regulations on that. But the way we thought about it was just primarily through non-custodial architecture, because if it's in the custody of the user, then, you know, for us, that's from a legal jurisdictional perspective, we felt like we could breathe a sigh of relief. Now there's also the moral imperative of being like a company that wants to help people and like create value. And of course, I think that from that standpoint, I think that those can be like things that would be evocative of the same conversations that would happen with a wealth manager, but but you can just pretend that they're super smart and they can parse 1,000-page long documents and they don't sleep and they're actually monitoring all these signal sources for you as well. I, by and large, think that consumers will be fine with that. I think you need to explain to them the deterministic or value transfer pathways or executional pathways where they could get screwed. But aside from that, you know, it's like I'm creating the strategy or I'm setting this thing up. People are doing OpenClaw, local systems, full access to their PKs and stitching together that with Hyperliquid APIs right now. Like they're ready, consumers are ready to try to figure out ways to get an edge. But the larger consumers, like the uncles and the aunts and the, you know, other people, I think that they need to, I think it'll just, sorry if I'm talking too long, but I think they'll need to, like, there'll be a lot of hand holding. I think that'll be necessary.
Anybody else? Soufia?
Yeah, I mean, on the Mellow side, I think so 99 or like all of our vaults right now are pretty permissionless, so any agent can go and deposit. I know that we're looking into having KYC vaults as well. So I think it just kind of becomes more of a question of like access to yield, and then also know your agent. Like, will your agent have its own identity so that it can access, you know, gated yield like opportunities? I think that's something that we have to look into. But for the most part, I think, again, just kind of bringing this back to DeFi, what's so great is that these agents can permissionlessly deposit and withdraw from all like smart contracts, which is not the case yet in like TradFi. But as I said, like not a distant future if it becomes like tokenized.
Mikael?
I think what's just come from the practical stuff. So when we start to use agents, and there are two kind of things how you learn to do it. Yes, the first part you do it theoretical task, and then you are ready to deploy, I don't know, like $1,000 from your pocket. It's too big gaps, so you can talk a lot of theoretically, you can ask ChatGPT. When you try to do something in the real world, you can find that unfortunately blockchains is not ready yet. So if you go deeply in the technical side, I can tell even with current situation, we faced incorrect node, res node things which deliver incorrect data. It happens, I think, maybe around a year ago when our monitoring system were alarmed. Why? Because some node was updated with mistake. We have no trusted source of data, so what we can consider Twitter, wow, we will trust Twitter seriously for decision makings. It's not true. The next part, what you also should ask, what's about pricing? It's also a huge problem because right now, if you talk about BTC, you can get a very precise price data because there are a lot of trading volumes, there are a lot of things you can aggregate. For people who may be not so familiar, price should be computed by aggregating huge amounts of data. And for many on-chain assets, even they look pretty cool and lucrative, maybe this price data based only on 3 points, and when you go into this position, you can lose a lot. And of course, your agents could not see the whole picture because the data is not enough wallet. But why I'm so optimistic? Of course, we have so many potential problems how to deliver data, and this part of the stack is underinvested. So, for example, people invested good in protocols, in blockchain itself, but services who provide data, who collect data, you never pay for your MetaMask because you can see your balance. You think it should be free. But someone should really keep all these nodes to indexing data, etc., etc. And it's quite heavy investments if you want to get a precise data there. But why I'm so optimistic? Imagine things from the different part. In finance, we have a limited quantity of people who understand how finances work. It's why we have a lack of attention. So what we have at the beginning, we have a multiple exchanges all over the country. Then there are some small parts. Then they listed thousands of assets. Then people, you have not enough time to analyze everything. So we built ETF just to summarize. So ETF is just a summarization of assets on one exchange. And then so many information. And imagine you can clone PhD if you have a cool agent. So we will have more fair market, because if you are not in ETF, if you are not in top 500 on some exchange, it's so hard for you as a company to achieve this place, because of course it's how to attract attention of these great financial workers should really consider your company. And agents can solve this, because we have a kind of 10,000 more attention for things happens in the real world. And I think these agents could find real gems, very promising companies, and they really reshape the market. And what we really need to do is just to build a very robust data sources to get a real data, not a fake data about my company. I can report everything, and then someone built my token, what we can see during these token casino games here. But real things could be totally disruptive, and I think we will find so many interesting primitive in the future when we can scale this attention on real data.
Yeah, the data problem is one of the largest unsolved problems in our space. And even just in the past 24 hours, with the latest poly market around Michael Saylor selling Bitcoin, before the end of May, this is a consistent problem. I know at least one guy in the audience lost a lot of money because of that. And so I think there are some big unsolved problems. I agree that it's underinvested. I'm hopeful as well. But to your question about what's stopping it, I'm generally aligned that there's no real blockers. But the thing that I want to highlight is where I see this going, and once the agents have really started to be a mover of capital in a major way, I think the thing that we're going to start to see is a lot more acceleration. So if you look sort of across the landscape and you look at Hyperliquid, you look at prop AMMs, you look at prediction markets, what I see is DeFi is really like approaching asymptotically TradFi. And maybe you could say there's some additional stuff like prediction markets, but in practice it's really a regulatory arbitrage. And then when you layer in the cost of running a distributed network, the cost of coming to consensus, the risks associated with inaccurate or untrustworthy data, it's pretty much an asymptotic approach. You could say it's slightly better, slightly worse. The self-custody is a big thing, but only for so many people in practice. So what I actually am excited about is I think the agents are going to be much faster to adopt new technology. And one of the big frictions that we have right now on chain is there's a tremendous capital inefficiency in the way that things are currently architected. And this, for example, comes from the nature of how smart contracts work in the EVM and the SVM. So I think we've had similar experiences building DeFi protocols. These are things that you really only learn about the frictions from going in there and running into walls again and again, and then you're like, okay, well, where do we go from here? And my hope is that the agents will be the early adopters of some of these new, more exotic systems, like the one that we're building, where we've tried to, from first principles, really break through the walls and open up the design space. And then it's like, you no longer have such a high degree of friction for humans to adopt this stuff. So to me, there's no real blockers, but I think it's more of a positive thing about once it starts to happen, I think good things are going to start to transpire.
Awesome. And that is right on time. So I just want to say thank you to everybody. Thank you to the panelists.